company formation, and entity selection. Prepared for and presented at the 2016 Square One Entrepreneurship Training Program. Square One is a program of the Center for Emerging Technologies. CET is an affiliate of the Cortex Innovation Community. Square One is funded in part by the Missouri Technology Corporation.
So today we're going to talk about 5 main areas in entity selection and formation. Selecting your attorney, selecting the type of entity, preparing the documents, protecting your business relationships with some key agreements. I'm just going to touch on a few of those because I know Sarah's going to follow up with some critical documents later, so I don't want to bore you with too many agreements. And then also just some approaching investors. You guys probably have a better handle on that than I do right now, but I thought I'd throw in a couple 2 cents. So selecting an attorney. So we're all not the devil, as you know, the jokes make it seem, and we try to really provide good relationships with our clients. And so, but part of that is for the client to realize that the attorney is part of your team. We're here for you, and we can only do as good of a job as, you know, what you communicate to us. If you go to an attorney and you don't give them all the information, you're probably not going to get as good a product. But there are, you know, business attorneys which help you with anything you need from your startup entity. At first you might think, oh, I only need help with my formation. Well, pretty soon you're going to be finding some real estate that you're going to need to lease. Somebody should look at that lease most likely. Then you're going to be, with investors, or you're going to be trying to get a loan for financing documents. So your attorney can be there with you every step of the way. And a general transactional attorney can usually guide you on all those steps, anything in the general corporate environment. And then, there's your patent attorney, which we'll hear from later as well. I'm going to start my timer because I'm afraid I'm going to go over without it. Unless, Christy, are you going to? Okay, so never mind then. So ask around. You have a lot of people that are probably just starting to use attorneys or have attorneys, and ask them, do you like them? Who are you using? What are they good at? How are their fees? Every time you call them for 3 seconds, do you get a bill for $28? Just ask all the questions. And then the next thing is really all about personality fit. This is what I think about any relationship. If I'm looking at hiring a new associate, if their resume is good enough, I'll bring them into my office. So if you're there, your resume is good enough. But after that, it's all personality fit. It's the same thing when you're meeting with a new attorney. You've looked on their website, you've got the referral. After that, they're going to be able to do the job. It's just, can you talk to them? Do you like them? Do they understand where you're coming from? Sometimes you might speak different languages. So you want to make sure you're all on the same page with your attorney. And then interview. I'm always happy to do an interview. People are like, hey, we're checking out new attorneys. I'm like, come on in. Love to sell you on me and my firm. Love to hear more about you, what you're doing, and let you know if I can even help. What if I can't help? Well, I'm sure I would find someone in my firm that could help you, but it's just you want to interview them. Go in and talk to them. There's usually not a fee for that hour for an interview, and if there is, check out, find somebody else, because you should be able to get in and be able to sell. They should be able to sell you in an hour, and you should be able to see if you like them without being paid for that. Also, another important thing. Do they represent a competitor of yours? Attorneys we always have to worry about conflicts checks. And if you see, hey, I plan on going after this investor hardcore, do you guys represent them? Because you want to know that right away. Otherwise, you're going to be conflicted out. You're going to have to find another attorney right away. So if there is somebody that you're pretty interested in, or that would come up on a conflicts check a lot, you just want to throw it out there in the initial interview. See if they can get around that or not. Do they provide value beyond just the legal work? Do they have any contacts to introduce you to? Whether it's financial advisors, investors, or just vendors, or hey, I got a guy that's looking to lease out a small room down, it's not going to be much, but it probably suits you well. Just do they know people in the market? Are they out there? Then check references. Do not be afraid to call references. Ask them, hey, do you have any other small businesses, clients? Can I get their names? Call them. See how long they've known them, how long they've done business with them. They most likely like them if they gave them a referral, but you just want to follow up, make sure. Then the next thing are billing. So that's the fun part. So typically, when you're starting up a company, you might not have a ton of money to be thrown after your attorney. And so you can talk about, what is your billing? How does that work? Is it billed monthly, hourly? Do you have associates that are going to be doing some of the, the nitty-gritty work to alleviate some of those billing fees? Because, in St. Louis, there is quite the discrepancy between firms and what the billing structure are. So, at Carmody McDonald, we have associates and, even paralegals that do some of the work, associates, and then partners. And a good partner will delegate a lot of the drafting work or other formation, calling the Secretary of State, seeing if your name's available, to an associate so that you're not getting hit with a higher dollar amount. So you want to make sure that they do those types of things. Other things you can talk about is alternative billing arrangements. A lot of firms have not really jumped into the alternative billing world yet. It's just the legal industry is a lot of older men, and they are stuck in their ways, and their ways are, we've always done it by the hour. Why wouldn't we do it by the hour? If we don't do it by the hour, we're losing money. And I'm like, how are we losing money if we don't do it by the hour? Oh, well, you could be working on somebody else for that same amount. Well, true, but I could also get, provide value billing here at a discounted rate. I could do a flat fee structure. I could tell you right up front how much I think it's going to cost, and if it goes over, that's on me, not on you. Because sometimes it is on the attorney if they go over. So there are ways you can do that. And some of those are hourly based, which I discussed, kind of like discounted hourly fees, blended hourly rates. Hey, can you blend your rates with your associate? There's all different sorts of hourly based alternative fee arrangements that you can talk to them about. And I'm not going to go over them all today, but if you Google it, you will find so many examples as well. And some of them are risk-based, and that's probably where you've heard of a contingency fee structure. And that's big in the personal injury world. So they're going to take your claim to court, and if they win, they get a third. A lot of that's not really applicable in the transactional world. But, you can still ask, do you have phased fees or fixed fees or flat fees? There's also some success fees in the formation world. So if you go public, they get, a percentage of that later. You can ask about these different type of fee structures, all to help alleviate some of those costs from you up front because, you don't have a lot of cash right now, and they know that. So the next is selecting your type of entity. So there's 4 I'm going to talk about today because they're the most common. And if you're doing a startup, it's probably what we would recommend you come in for. So there's the sole proprietorship, a limited liability company, a C Corp, and an S Corp. So C Corp, corporation, and an S Corp is a special form of corporation that I'll talk about. So the sole proprietorship, I'm sure everyone has heard about that, but I'll still go over it. So it's the simplest form of business organization. And everyone in here has probably done it whether they realized it or not. You babysat, somebody paid you $20, you were a sole proprietor. You went and cut somebody's lawn for $35, well, you were a sole proprietor. Everybody's done it. And that's how we all know it's the simplest form you can do. It's not a real legal entity, it's just you out there operating on your own. You collect the cash, you put it into your own bank account. And then so you're responsible for all the profits and losses. So that's just kind of a sole proprietorship. If you are doing a DBA as a sole proprietor, you do want to file a fictitious name registration with the Secretary of State of Missouri. So if I was out there babysitting all the time and I wanted it to be Angie's Baby Care, so I go to the Secretary of State site, see if that name's available, fictitious registration, and file it. That way, somebody could write me a check, Angie's Baby Care, and I could deposit it the same. So you want to make sure that if you are out there operating under a different name than yourself, that you do have a DBA. So again, some of the advantages. They're easy, inexpensive, obviously. You have complete control. You're the only person. Nobody can really tell you what to do. The man's not getting you down. So Well, there's little upkeep, no filing. Easy tax preparation. Why? Because it's all my income. I just put it as income on my tax return. Nothing to do there. Disadvantages. Here you go. Unlimited personal liability. So I'm Angie's baby care and I dropped the kid on the head. That's a real bummer. My day just got really bad because that is all my personal liability. I'm in big trouble for that. It's hard to raise money. If I just go door to door, hey, do you want to give me some money for myself? No. I mean, besides the crowdfunding that's going on the internet, I don't know how you do that. Nobody's just really going to give you money all the time. And it's a heavy burden, you know, and I really think the heavy burden comes into play with the unlimited liability. You know, that's what you have to think about when you're operating as a sole proprietor. Some sole proprietorships, they don't have a lot of risk involved in operating. So if you're out cutting lawns, maybe there's not a lot of risk there. But if your neighbor's dog comes out and you hit it with a rock and you kill it, that's bad, again. So, you know, there's good things and bad things about sole proprietorship, and depending on where you are in your company, what phase, it can be really good. But then there's always a time to step out of that role. So as a general rule, I'll give you recommendations, and I would say don't do that. But, you know, that's because I like you to come into my office. Yes?
Does having a DBA or fictitious name hold the name for when you do LLC?
So, but if you were doing a sole proprietor, so a lot of times there's rules. So if you went to the Secretary of State site and you wanted a DBA, you have to see if it's available, and it would be. And so it would be good because in my example, I chose a really poor Angie's Baby Care that's terrible. But so I could have that DBA, and you could do business as that. And then if you went to register as an LLC, though, you would have to add an LLC because most of the time the names state that you have to have an Inc. on it for a corporation or a company, and for an LLC, you have to have an LLC on the end of it. So it will hold the name for you doing DBA, but if you do just want to hold the real name, so Angie's Baby Care LLC, for when I form an LLC, you do have to reserve that name, and that's a different step. I think they're both like $10 filings or something. They're not expensive, but they don't last forever either. I think it's like 5 years. I can't remember the exact length. So you want to stay up to date on that too, but it's very inexpensive to do.
Is there an insurance concept here, like a sole proprietary insurance, that the owner of the company or basically you are operating can, so in case of risk liability, you can always go to the insurance claim?
Well, I think that you can do that regardless, potentially. Like if I got an extra umbrella for myself, a policy, and like $1 million liability umbrella on my own insurance, it's, you know, $17 extra a month, then I would do that just to cover myself, but it's not straight business insurance. It would just be extra liability insurance for you personally, and I'm sure there are ways to increase your coverage by different umbrellas with your insurance carrier, but it would be best if you spoke with your insurance broker about that because I don't do insurance.
Right, because if you're a business and they find out about it, then your personal policy, even with an umbrella, may very well not cover it.
Thank you. So, again, out of my area, but you can look into it, definitely. So the next type is a limited liability company. And I brought this up next because right now in Missouri, and maybe everywhere, this is kind of becoming what most people generally form. It's very easy to do it online yourself. I don't necessarily recommend that because I'll talk about a couple of reasons later. But a lot of people do it. It's pretty easy. What it is, it's a hybrid type of legal structure that provides the limited liability that you want, so you're not personally liable. Features of a corporation, so you have the features of the corporation that you're not liable, limited liability, but you also have tax benefits where it's passed through taxation, so you won't have double taxation of a corporation. So that's kind of why, you know, the LLC's only been around, like very around for about 20 years. So that's about how long people have been using them, and that's when the area law started. Before then, it was all partnerships and then limited partnerships and corporations. And I'm not even going to talk about partnerships or limited partnerships because, we barely form them. I don't recommend them. About a month ago, I had a client that really wanted to do one, and I think I spent as much time trying to talk them out of it as like actually doing it, because it just, with the limited liability, there's so much ease and structure and different levels of organization. So that's kind of the new hot thing. So the owners are called members. And, it's kind of a pet peeve of mine because I'll have a lot of clients that call and like, oh, well, my shareholders are stock. And I'm like, no. You're an LLC. Like, there's different rules. And just in my mind, it's easier if I remember you're a member and you're giving units or a membership interest. So it's pass-through taxation. So again, you report it all on your own personal income. So the advantages, there are lots of advantages, and I kind of touched on them on my overview, but now I'll hit them a little more in detail. So it allows the LLC unlimited amount of members or types of members. So if you had another LLC that you wanted to be a member of your new LLC, LLCs can be members, corporations can be members, your trust can be the member. You can be the member, so unlimited on kinds and numbers and types. So that's a really great feature. Again, the limited liability for members. And what limited liability means, so what it means is every time you form an entity, so a corporation or an LLC, you have to put money in, right? Obviously. For an LLC, that's called your capital contribution. So your liability in the LLC is limited to the money you put into it. So that means that if the LLC goes out and takes out another loan, unless you've guaranteed that loan personally, or the LLC leases a building and later on you can't pay the loan, you can't make the lease payments, they cannot come after you personally unless you've stepped outside of that box. You signed a guarantee for the lease. You signed there's ways for everybody to get around the limited liability, but for the LLC purposes, they can't come to your assets to collect on that as a straight member of that LLC.
And Angie, I would just add that for most startups, because you have no track record, it is not uncommon for you needing to do a personal guarantee.
That's very true. It's not uncommon, but that doesn't mean you have to have your wife sign it, or your husband, or anybody else. So for instance, a personal guarantee, you take out a loan. So the LLC is going to take out a loan to help fund its operations. It's a line of credit. So it's going to be $10,000 line of credit. The LLC has to make the monthly payments on that loan. If they don't make those payments, who are they going to go after? Well, it's limited liability. They can't go after the members unless you've signed a guarantee. And a guarantee means if they don't make their payment, I'll make it for them. So the bank then could come after you if the LLC is not making enough money to fund its operations to pay back its loan.
Well, then who's the guarantee then?
Who's the guarantee?
If you don't put yourself down.
Maybe you don't need one. Maybe there's enough assets of the company that it doesn't need one. For instance, I don't know, do you have a house? So think of it like a house. Probably a house is a bad example. Do you own a house? No. So if you wanted to go and get out a loan to buy a house, you could take out that loan, and that's you personally, okay? But if the LLC wanted to buy a house, the bank could say, okay, you're going to buy that property to operate out of, and we're going to take a deed of trust. So if the LLC doesn't pay, we're just going to foreclose and take the house. Therefore, they didn't need a guarantee. But if they don't have appropriate collateral otherwise, so if they don't have other assets to go after to pay back that loan, then they're going to ask for a guarantee for somebody else. Yes?
Regarding the unlimited number or kinds of members that an LLC can have, so would that be for example, if she and I own the business 50-50, so the members were just like two parties. If you were to add in other members of it, would it be for a percentage of the company then at that point?
So there's a bunch of different structural questions that you threw in there, but you can do that. So what you would have is if you first had an LLC that you formed with one other person, so you have 2 members. Later on, you want to add a 3rd member. You can do that. And you can give her as much or as little percentage of the company as you want, as many or as little membership interests. It doesn't have to be for a 1/3 of it, but you would have to revisit all your documents at that time, unless you, in your organizational documents, assumed that you might have somebody coming in later. In LLCs, you could also give them profits interests, which means you're just giving them a percentage of the profits rather than the LLC actual interests. So there are different ways to do that for the unlimited number and kinds. So there's a lot of flexibility for distributing your profits in an LLC. You can pretty much, if 2 people started it out and say, me and a friend started out, and I'm the idea person, but they're the one that's in there working every day, grinding it out. Maybe my idea is only worth, we're 50-50 owners of the company, but for distributions and that, I'm going to get a smaller percentage because I'm not doing the day-to-day grind. So you can divvy it up a lot of different ways in an LLC, which makes it very appealing for people. Let's see, there's very little to do with, say, the state after you form an LLC, unless you're in Illinois, then it's, Illinois just is very expensive. For instance, Missouri to form LLCs are like around $100. Like Illinois is like $750. It's just crazy. And but in Missouri, after you form it, there's not a lot of upkeep. You don't have annual reporting requirements with the state. You don't have to send in every year your registration saying who your board is and who your officers are. Just kind of are out there operating your LLC. So little upkeep. So the tax benefits are pass-through taxation. So the entity is not taxed. So that's what pass-through taxation means. It's the entity is not taxed. The taxes flow down to you as the owner of that entity. So a corporation, by way of example, is subject to what they call double taxation. The entity is taxed, and when they make a dividend payment to the shareholders, they are also taxed. So there's 2 levels of tax there. So the LLC, there's only 1 level of tax. So that's kind of the big pass-through taxation glamour, is that there's only 1 level of taxation.
Can a LLC be nonprofit also?
No, I think only nonprofit corporations. And that's because there's a lot of requirements to file with the federal government in order to get that tax exempt status. Let's see. Another thing about an LLC is you can generally take out assets without there being a negative tax advantage. Let's see. And again, you only have your single tax return. You won't have an LLC tax return because everything flows through to you. So those are kind of the benefits. There are disadvantages though. So there are member issues. And speaking about 50-50 owners, there's a lot of member issues there. If you're 50-50 and you don't have a good operating agreement, talking about what happens if somebody dies. So you're in it with your partner, they die. Where do you think that membership interest goes? Well, unless you provide for it in your operating agreement, it's going to go to their spouse. Did you want to be in business with their spouse or their kids? Probably not. So, there's a lot of things to think through when forming an LLC. Other member issues. You could be in a deadlock in a 50-50 situation. You want to do something, they don't want to do something. Unless your operating agreement provides what happens in the deadlock situation, that's a big member issue. Then there are some other member issues on, member manager issues. So if you are members of the LLC, do you have a separate manager? If you do have a separate manager, or if you're the manager and your other member is not a manager, what decisions do you have? What powers do you have? When do you have to get both member approvals? So there's a ton of member issues that, they can generally be worked out. If you think through them, you have good counsel. It just, a lot of times people will come to you and be like, come to me and be like, I want to start an LLC, one other partner, member, we're going to have 50-50. Don't worry about any of that. We get along great. I've known him since childhood, and no, we always agree, it's fine, it's fine. And you know, I'm just like, okay, well, I'm sorry, but I'm Mrs. Doomsday, and that's what I'm helping you prepare for. Because there's gonna come a time when you might not agree, and it's easier just for you to have already thought about it, and for this document to kind of work through the process of what happens if you don't suddenly agree. So, other potential tax disadvantages. So, upon the sale of your interests, there can be capital gains. So that's subject to ordinary income taxes. They have limited ability to participate in fringe benefits. So if you wanted to pay for your health insurance or things like that, like fringe benefits aren't, tax-wise in an LLC, you don't have a lot that you can do there. So those are things to think through. And then there's always employment tax issues as well. So every time you make money, you're paying employment tax. I work for my company, so they pay half of it, thankfully. But if I only worked for myself, I'd be paying all of it. So you have to, as well, there's employment tax issues too that can raise the cost of an LLC. Other issues is, I was just bringing up all the potential member issues. Formation can be kind of pricey sometimes. If you're just the sole owner of the LLC, forming it's pretty darn cheap and can be pretty darn easy if you're the sole owner. Once you start bringing in other people, there can be formation costs involved. And that's why sometimes when you're finding that attorney, you're like, okay, I want a fixed fee on this. We're going to come to you. We want you to hash out all the issues with us, and then after the document, we want it all for under $1,000. We want it all for under $1,500. What's in your budget and what that attorney is willing to work with, you can do, but sometimes formation can get expensive for an LLC. Uh-huh.
Two questions. You hit on tax benefit again. I heard you say that there were limited requirements, but then I missed the rest of it. And then what you were just talking about, is it costly to form the LLC and then go back and amend it later with additional members?
So you're basically doing two companies. You're not doing two companies, but you're going to have, if you are a sole owner of the LLC, sole member, LLC, you are going to have a totally different operating agreement when you add other members. Because you don't have to think about management issues. You don't have to think about control issues. You don't have to think about transfer issues. You can do whatever you want. But once you start, if you later amend to bring in another member, which is what I would recommend doing regardless, like if you are operating an LLC, a sole member, do form your documents. But if you bring in additional members, you're going to have to revise those, and it is going to cost again to do that.
Is there a best practice around that?
I don't necessarily think a best practice, except for the fact that you just want to make sure that your operating agreement, you don't want to just add another member without making sure you amend that if you are operating as a sole member currently.
Is there guidance on the size of company to be an LLC? Does it make sense, like when you start generating more revenue, to switch from an LLC to a C Corp? Is that a common starting thing?
So a lot of times LLCs are just like cash cows too. Like you can make a ton of money as an LLC. A lot of times when you'd be switching to the corporation, if the LLC, so the structure for an LLC with you could work for a lot of money. Like I have a clients buying $50 million pieces of property that are all LLC structures. They have a bunch of different layers of LLC, but it's all still LLC. So corporation a lot of times comes in for startup companies if you want angel investors. Or if, basically it's investors. And, what I would say is don't plan for, I like for everybody to dream big, but your documents don't need to be dreaming big. Your documents need to help you operate as you currently are. And if it's a single member, if it's two members, and then, because if you get funding or if an investor comes in, they're going to say, you might want to use my attorney. Actually, I'm going to make you use my attorney, and we're going to change this to a C Corp, and we're going to do X, Y, and Z. And of course, you'd still have your counsel to make sure those documents are appropriate and they work. But I don't think there's a magic rhyme or reason when to switch, because if the LLC structure works for you, it can continue to work for you no matter how much money you make. It's when something else dictates additional, the C Corp structure, whether it be additional investors or something like that, that you would need to switch.
So if you file the LLC on your personal taxes, but you have a 50/50 membership, each one of those entities file with their own personal taxes, and what if they do that jointly with their spouses? So that's now you've got two additional people in that tax structure, huh?
So you mean their spouses are also members?
They're
They're not.
not.
So all the income you make from the LLC flows straight to you. So whether it's 50% of profits or 50% of the losses, that 50% goes on your tax return. You don't need to look at theirs or worry about theirs, but yeah, they should be reporting, their profits and their losses passing through to them as well.
Like members are owners, right, ma'am? So if you had like 10 people working for the company, how does that pass-through work? And that's still a little bit confusing in my head. Like, so you make 200,000, just to take a random number, right, per year, and then say you have like 10 people making 20,000 each or 10,000 each, just to keep the numbers straight. So you would file 100,000 in your taxes, and then the remaining 10,000 would be filed by individual 10 people who are doing it?
So,
Just trying to-
so
because
one,
we talk a lot about owners, our members. I'm trying to understand how does that structure work when you're hiring people.
okay, so I'm not an accountant, and I went to law school because I'm not good at math. So, no matter what numbers you threw at me, I'm confused already. But so what you have to worry about is your profits. And you made 200,000 in the example, and you are paying people. So that is not profits. That is, at the end of the day, what is your gross revenue? And those are people, employees are all expenses. So whatever you make at the end of the day, that's what's flowing through to you. That's your profit. So the employees they're an expense. They're not members. They're not getting a portion of the profits unless you've worked something out with them. But generally, they're not. So that's how the pass-through works. So it's just on company profits. Just so that think of it at the end of the day. After you paid all your bills, what'd you make?
So can members be employees,
Of an LLC?
taking payroll?
No. So that's one of the things. As an owner of the LLC, you can give yourself a distribution. So you can take money out of the company as a distribution, but you don't there are ways to do it. I mean, that you can guarantee yourself so much distribution per month. So it's kind of like taking a salary or things like that. But in general, you're not an employee of an LLC.
Isn't there employee tax too, when you have over a certain number of employees, I think up to like $11,000 or something?
There are employment taxes, and generally any money you make, you do need to be paying employment taxes on them. And if you pay employees, if you're paying salaries, they pay half of the employment tax and you pay the other half as the business owner. But again, I'm going to stress, accountants are much better at that than I am. So. Oh, okay, well, we need to go quickly. So a corporation. Corporations, everybody has heard of a corporation. You can go out and buy stock in a big company, and then you're going to be a shareholder of that corporation. So I'm just going to start with that to talk about corporations a little bit so you understand. So if you wanted to go out and buy stock of Coca-Cola, do you think you'd have any decision-making power? No. You own a piece of paper that says you own so much of Coca-Cola, and you're going to make a dividend on that. And if Coca-Cola goes bankrupt, all you've lost is what you paid for that stock. So that's kind of a corporation in an overview. So it's owned by all the shareholders. It's pretty complex formation and administration. And it does have the double taxation that I spoke about earlier. So the corporation, whenever Coca-Cola makes a product, they are taxed on their profits. And then if they pay all their shareholders a dividend, at the end of the year, you got to put all those dividends on your own tax return, and you're taxed on your dividends too. So that's what it means by 2 levels of taxation. Corporations' advantages, it's the most recognizable form. There's limited liability for shareholders. If something goes wrong with Coca-Cola, you're not in any trouble as a shareholder. There's an entire established body of law about it. So, like I said, LLCs are pretty new, so sometimes you're walking a fine line whether, what you can do or what's going to happen in certain situations. Corporations, you can look up different situations under the statutory framework, so cases, or just what, if you pull up all the statutes in Missouri, there's a very fine established body of law that says, what you can do or not do. The tax advantages of a corporation. So what are the advantages? So the fringe benefits, so you can pay your health care, you can do insurance premiums, there's reimbursable medical expenses. So there are some benefits for the C Corp structure. Again, better to talk to an accountant or a tax advisor about those. Disadvantages, administrative burdens. So every year, if you formed a C Corp in Missouri, C Corporation, you have to send in a piece of paper to the state every year that says, these are my directors, these are my officers. So it's just a little more upkeep than an LLC where you typically don't have to do that. And disadvantages can be minority shareholder issues. You have no say if you own one single little piece of stock. So while that might be good, if you're forming the corporation, it'd be great, you're the main shareholder, you're a majority, it's awesome. But at the same time, if you're taken out by a big investor and you become a minority shareholder in your own company, you have very little say a lot of the time. So that's something to look out for. S corporation, so it's a corporation created through an IRS tax election. And so what it is it's a corporation that's formed and you check this box, you check the box and you are taxed as an S Corp. And that means you are taxed kind of like the LLC. So the profits and losses pass through to the owners rather than the double taxation. The downside mostly is in what you can do. So in an LLC, I said you can have basically any type of member, right? S Corp, you cannot. It's only individuals generally can be shareholders in an S corporation. So another LLC can't be a shareholder. You can only have 100 shareholders. There's only one class of stock. So a lot of times when you form a corporation, you might want to give yourself some premium benefits. So you have a preferred class of stock where other people that come in later, say grandma gives you $100, you're just going to make her a common shareholder. In an S Corp, you can only have one class of stock. So in your materials, there's two different entity comparison charts. And so sometimes you can just, do a quick glance. The more detailed ones at the very end of your materials. But it gives you a lot more information than I went over today and that you can look at. Like if you forget, how many members can this one have, or shareholders or owners, you can look across and see what might work best for you. So preparing the formation documents, you have to choose a company name. Secretary of State site, you can go on there, see if the name's taken or not. Is the name available? And then you kind of want to do your own it's consumer protection test. Is anybody going to get confused by you using that name? So if you start, Coca-Cola, that's probably not a good thing because it does not pass the consumer protection test. Somebody's going to get confused. Another big thing, .com available. Google that name. I've had some people that say they want to do something and I Google it and I'm like, are you sure? Because my screen just went blue from that. So you're going to want to check that out. Jurisdiction of formation. A lot of people want to do Delaware. Why do they want to do Delaware? I still don't really know. I think it's supposed to benefit you a lot of times in some way. If you have investors, it's good to do Delaware because they're going to like to see that. Delaware case law is generally more company friendly. So there are reasons to do it, but if you're just starting your company, Missouri's fine. Missouri's great. And if you do mostly business here, I would do it, or else you'll have to form a fictitious or registration here as a foreign entity. So that's kind of, where to do a business. Preparing the documents. So the certificate and articles of organization for an LLC and articles of incorporation for a corporation are what get you formed. You file them, you pay your fees to the state, and you are formed. But what matters are the next documents, your operating agreements, your bylaws. You need some initial acts of managers, which are getting your EIN. And then some other acts, for instance, appointing your board. Then you got to appoint your officers. You got to appoint your president who's going to do stuff. So there's some initial acts. Issuing unit certificates, you don't always have to do that. Most of the time I don't recommend it unless your bank's making you. And then it's just another thing to keep track of. If you lose it, you gotta come up with, a new one, and you have to have more resolutions of that it's lost. But shares, you do have to issue shares. And then you wanna keep good record books. If you go to the bank and you wanna open an account under your company's name, they're gonna, where are your articles? Where's your certificate of formation? Where's your operating agreement? Where's your EIN? And if you pull out a nice little book, it's easier for you and it's much easier for them as well. So there's sample articles of organization in your binder. They're probably just as hard to read as they are up here. But as you can see, they're pretty simple. The name of it, what you're gonna do to transact business. Most of the time in that transact business line, you wanna transact all lawful business, just as a catch-all. The name, one of them that's pretty important is your registered agent. Some people just put down their house. Well, your registered agent is where somebody comes to drop off paperwork to sue you. So unless you want like a service of process coming to your house or something, it's nice to pay $100 to an agent company. There's CSC, there's a bunch of different ones that will take those papers for you so nobody has to come to your house. And then just other general information, how long you're gonna last, perpetual.
Question in 5
Oh,
minutes.
okay,
You wouldn't want somebody to bring it to your house just because it's embarrassing? Or
probably. Because you have a share. You have a service agent come, and usually it's a police officer or something. If you don't care, go for it. Yeah. But it is kind of just your registered agent where, all the formal documents are sent. And sometimes it's good to have somebody collect those so they're not lost in all your junk mail too. Preparing the formation documents, that's what you would call me for. So we can just skip over those. No, I'm kidding. Your bylaws and your operating agreement. So I'm just going to go over them because they're basically the same. So when are your members going to meet? What are your meetings going to be? Who are the managers? What decisions can they make? Something you want to think about, though, these are all important details. They seem silly. When do we want to meet? What are the notices? Who cares? Just draft it. No. Somebody might put in there 3 days written notice. So you have to tell all your members in writing, no, make it, I want to be able to email them. I want to have telephonic meetings. These are all important details that are easily glossed over, but you really want to think about hey, we operate this on the swing of it. I call them and we make a decision. Well, you better make sure that's in your documents. Decisions, allocations, distributions, how much capital are you going to initially put in? That's important. One way to get rid of that limited liability is to not put enough capital in right away, undercapitalization. So you want to make sure you're not each putting in $1 to start up something where the next month you have to pay $1,000 to someone. So at least put in $500 a piece then. You just want to make sure you're adequately capitalized. Other considerations, what are you going to do if somebody dies? Restrictive provisions. So key agreements, luckily I can go quick because Sarah's going to cover a lot of those. But when different things happen in your company, you have to plan for that. And so, for example, buy-sell agreements, this is pretty big on 50-50 owners. And what it is, what I recommend is Russian roulette. And it's a provision where if we're in a fight, a true deadlock, I'm going to say, you either buy me out for $50 a unit, or I'm going to buy you out for $50 a unit. You decide. So they decide. So it's a really easy deadlock resolution provision that, if I'm willing to be bought out for that or buy you for that, it's pretty fair. So that's one easy way to solve deadlocks, and buy-sell agreements provide that a lot of times. Employment and consulting agreements. I did want to take a second on employment agreements. A lot of startups just hire people without anything written. In Missouri, you're an at-will employee, meaning the company can fire you at any time, or you can leave at any time. As an owner of a company, that's great because you can get rid of them at any time if you want, unless you enter into a formal employment agreement. But you do want to make sure you at least have some sort of offer letter to them. What are they going to get paid? What is their vacation? Do they have any benefits? Do they don't? Something written regarding the terms of that employment. Now, if you put in, you're going to be here for at least a year, that's no longer at will. You're promising them a year. So don't put anything like that if you want them to be at will employee. But at least you want to make sure they know how much they're getting paid. You don't want any fights about that later on.
Got 3 minutes?
Okay, thank you. Non-disclosure, non-compete, and non-solicitation agreements. These are very important to protect your proprietary information. Non-disclosure, they can't, this is a written agreement that you enter into, and it's kind of stating, if you leave, you can't tell anybody about, our proprietary information, our confidential information, our know-how, our secret sauce. You can't tell anybody. A non-compete portion of it is, you can't compete with my business for at least, in Missouri, 2 years is pretty general. After that, sometimes they get hard to enforce. So you can't compete with my business. You have to be pretty limited in scope in describing what your business is, or it's not going to be enforceable. And then you also have to be a little limited in your geography. If you only operate in Missouri, you can't compete with my particular business in Missouri. If you say the whole world, it's probably not going to be enforceable because you don't compete in the whole world right now. And then non-solicitation agreements. That means if they leave, they can't come after your clients, your customers, or they can't come after your other employees. So you have to determine which one you want to include in there. But those are very important agreements for startup companies if you do have a lot of proprietary confidential information. Technology transfer agreements. So these are pretty important if you have people working for you that are inventing things and you want to keep all those ideas in-house. There's a lot of specifics in them. You got to look at, offered support afterwards, during. So those can get kind of complicated, but just know they do exist. Approaching investors, you need a good business plan. So elements of your business plan, you need to say, what you plan to do for the next 5 years. And the biggest thing I'm going to say about business plans for you guys is funding. You need to include what do you want, how much funding, how long is it going to last you, what are you going to do with it. All these types of funding requirements should be set forth in your business plan. Business plans you give to investors or you give to banks to get a loan. There's lots of ways to use a business plan, but I would say a business plan is really, really good for you. So you know what you're doing, you know why you're doing it. You're coming up with a solid plan for yourself and being able to sell that to other people. Find the right investor, be realistic, disclose your risk, disclose your it's also like a beauty pageant with investors too. You think you might need the money, so you're going to say yes to anybody. But if you don't really like them, again, like your attorney, you might be in a bad relationship for a long time. So with investors, I would be picky. Make sure you get along. Make sure they know your product. Make sure they understand you. See other companies that they've invested recently and go talk to those companies. So there we go. Very speedy.
I just had one question. You only touched on it briefly about 501(c)(3)s. Is that not a legal organization? Or is it
No.
different? So yeah,
Yes.
it's a tax status.
It's a nonprofit corporation, right?
But how would I form my organization? Because based on what you laid out, an LLC wouldn't be good for me. No.
Well, you would form actually what it is a nonprofit corporation.
Okay, so that's a
and they have their different set of documents that they need as well.
Right.
And then they have a lot more filings that go to the government, and you have to prove why you should be tax exempt. And forming a nonprofit corporation, unless you have somebody doing it for you for free, it can be pretty expensive.